TV18 Motilal Oswal Studio.
The Kospi is also down almost 0.5% in today's trading session.
25,255 and then 25,400, which is the 61.8% retracement.
Very strong deal momentum that we have had in quarter one.
25,118. The Nifty Bank is down about a third of a percent, 56,640.
Nifty right now, we are seeing some stress come by. So Nifty is at the lows of the day as we speak.
We benchmark to most prudent in market on an annual basis.
The electronics industry, which also uses these magnets, is also impacted by this severely.
For the markets, we've been talking about that cut. Nifty is below the 25,000 mark.
Well, that is the day so far, and it has been subdued. 500 lower on the Sensex, Nifty down about 140, 150 odd points. So it's kind of ending how it started this Friday as compared to the Monday trading session. This is Closing Bell. We are coming to you from the CNBC-TV18 Motilal Oswal Studios. I'm Prashant. With me, my colleagues Reema and Surabhi. Guys, good afternoon.
Hi, and we've been below the 25,000 mark for a greater part. I think it's only in the morning for the first 1 hour that we were above that level. And there hasn't been much recovery from the lows.
But at least, guys, we were almost threatening to break 24,900 also at one point. So at least from there, there's some kind of, semblance of stability that's come in. But there's no denying it. It's been a weak day and it's been a weak week as well, at least as far as the headline index is concerned.
No, absolutely. And I think if you just look at the Nifty, which is around 125, I think 50 index points is just Axis Bank and ICICI Bank. 25, 20, 25 in that. I mean, the index changes will give you that plate will tell you exactly the split. And actually IT is pulling the other side. IT has been down all this week, but IT, for what it's worth, is up a little bit. I mean, a bunch of large cap IT stocks, but it's banking, which is really, there you go. The IT index is flat, in the green at least, but it's banking, which is the majority of the cut, which is coming. So it's, one thing or the other. It's IT, now it's banking. HDFC Bank numbers are there tomorrow. So I don't think it's numbers really. Numbers are expected to be pretty okay. But, I think after Axis Bank, there is a bit of nervousness, which we're seeing across the board. So 25,001, right? That was the low, that was the low so far. That low is gone now. And if we close under it in a substantial way, in a convincing way, and I think then we'll have to kind of sort of look at lower levels really, which kind of start to come into play. The assumption was that this level will hold, the low will hold, and then maybe the market consolidates a little bit. So the close today, weekly closes are always important in any case. The mid and small cap indices, I think they're also maybe not doing very much. Advanced decline, the last I checked, was negative. But it's not as if there aren't buzzing stocks with volumes. There is a fairly long list which is active in that sense as well. Guys, I just want to quickly put out the, what's coming up on the show in terms of stocks, etc. This is what we're going to talk about, right, on the show over the next 60 minutes or so. The big movers. Axis Bank is trading with deep cuts, so that's coming up in some detail with our research analyst. It's the top Nifty losers, of course, loser after sharp deterioration in asset quality. Wipro is the other one. Reema is going to talk about this. So it's up after management guided for a much stronger performance in the second half. There are some upgrades as well. LTIMindtree is the other one, which is still... which is, of course, on the show as well. The management will be speaking with us. So that's another company, a stock, which we will focus on. And, of course, we're watching out for numbers from Reliance Industries. That is later today. That is a big one. And that has the potential to move markets. So we'll be sort of getting you expectations from there as well. HDFC Bank, ICICI Bank over the weekend, as always, on Saturday. So it's a busy weekend. We'll get you previews going there. So that's all of which, what is coming up here on Closing Bell over the next 60 minutes or so.
Yeah. So ICICI Bank, HDFC Bank and Reliance, the three of them, that's 30% of the Nifty weight. Yeah. And that outcome is going to be decided in the next 24 hours. And you spoke about, IT. It's actually just Wipro, and Wipro's weightage in the Nifty is sub 1%. So unfortunately, although it's up, it's higher by, I think, about 2.5%. It's not really moving the needle too much. I think 0.65% to be precise is Wipro's weightage.
No, that's right. So it's not doing too much. But another point to note is that so far, this week, the broader market was outperforming. The mid-cap index was up 1.5%, small-cap index was up almost 2%. But today, a lot of that is also changing. And today, you have the mid-cap index down. The advanced decline ratio is very negative. So that sense of, forget about the index, keep looking at stocks. That is under a bit of a question mark as we speak. I just want to point out one or two quick names before we move on. There is some profit taking in defense stocks that's very, very clear today. So look at a Bharat Dynamics, a Data Patterns, a BEML, Astra Micro. All these stocks are down between 2-4%. That's the Nifty Defense Index, losing about 2%. On the flip side, I mean, if you want to look at gainers, then I want to point out one stock actually, and that would be GMDC. Now, the rare earths buzz is back. There are indications that there could be a high-level meeting, perhaps chaired at the PMO level itself, that could be looking at the whole rare earth issue, the crisis, and how India can offer a counter. And GMDC is known to be, a company that could have significant operations here in terms of not just mining, but further processing rare earth elements as well. And that buzz has led to this move on the stock today. So keep it in mind. We'll discuss it with our colleagues, with our experts and our guests as we go forward. Let's get started then. Ashish Kayal is with us on the show. So let's get some trading strategies going. Ashish, hi. How have you read the market's weakness? And what are the trading calls now?
Hi, Surbhi, and afternoon to all the viewers as well. See, if you look at the market weakness, yes, we have moved down below that 25,000 mark. But if you look at the overall OI data, that suggests that both the call sides and the put sellers are still active on both sides of the tail. So which means that it's still expected to be a range-bound moment with a minor support at 24,920, a major hurdle at around 25,080, and I think around 24,920 and 25,080, that's the range we can now expect markets to move. There is some kind of a short-term attempt to move back on the upside, but 25,080 has to be broken for any kind of a meaningful upside movement. This major dragger has been Axis Bank post the results, but Bank Nifty has also moved on the downside. Having said that, there has been stock-specific action that has continued, and I think the first stock pick over here can be NMDC. We can clearly see a very smart bounce back in today's session. The stock was consolidating over past few days, managed to move back on the upside today, breaking out there, and we can expect a target of around 75 on NMDC. On the downside, one can maintain a stop loss in this stock at around 69. And the next stock on the buy side is going to be Ambuja Cement. It has been slowly and steadily inching higher and is about to start the third wave on the upside, which looks to should be a strong momentum picking up in the coming week. And one can expect a target of around 630 in Ambuja Cement. On the downside, maintain a stop loss of around 588 levels.
Got that. By the way, some large financials are moving. So Bajaj Finance has moved to the day's high. It's 2% up, crossed the 50-day moving average. And the other one is ICICI Bank. ICICI Bank is up close to about 2/3 of a percentage point. From the day's low, it's a recovery of 1.5%. Look at that spike on ICICI Bank in the last hour of trade going into its numbers tomorrow. But the big gainer on the Nifty today from the word go has been Wipro, so holding out with a gain of about 2.5%. Now here Q1 was muted on expected lines. There was no negative surprise, but no positive surprise on revenues or margins. But what did the street like? Just two things. One, the company is guiding for improvement. For Q2, the company's guidance is -1 to +1%, which means at the midpoint, it's 0%. This is an improvement compared to -2% in Q1. So on quarter-on-quarter basis, assuming the macro doesn't deteriorate in an extraordinary fashion, Q2 should be better than Q1 by approximately 200 basis points. Then the company in our interview said that H2 should also be better than H1, should be stronger. They're quite optimistic about it. And when asked whether this translates into FY26 being better than FY25, they said, I think so. What's underpinning this confidence is the deal wins. Deal wins for the company have been very strong. Large deal wins are almost touching that $5 billion mark. The deal pipeline continues to remain strong. The total deal wins are $5 billion, close to that. Large deal wins, 16 large deals won in the quarter gone by. So that's giving the company a lot of confidence into the next couple of quarters. In fact, we spoke with the management, listening to excerpts from that conversation on growth, margins, and how they see the environment.
So there is this very strong deal momentum that we have had in quarter one, which we trying to carry to quarter two. Of course, some of these deals will take its own time before we start ramping up. Second half for us will definitely be better than the first half, especially because of the large deal bookings and the pipeline that we have at this point in time. What is very important for us to execute these large deals. And also the pipeline continues to stay strong for us. So that gives us the confidence that H2 will be better than H1.
For those deals to really translate into revenues, it will require upfront investments. There will be pressure on costs. You know that large deals typically come at lower margins, and there will be some pressures that we will have to offset. We will go back to that muscle of operational excellence that we will continue to drive. And those are the puts and takes on margins. We don't guide for margins, but we are happy with our performance in Q1, an 80 basis points improvement. And from there, we will take it. I think in Europe, we've had, for the last 4 quarters, we've not performed as well as we ought to have. It has been a combination of the macroeconomic environment, lower discretionary spends, but also certain client-specific issues that have played out. We believe we are very, very close to bottoming out. We have a large deal win that we have secured, and also some very good deals that we have also secured in Q1. Our pipeline is good, strong. So we are very, very hopeful of Europe bottoming out and coming back into performance starting second half.
Okay, that is Wipro, and the stock's been holding up. We have Sudeep Bandyopadhyay joining us on the show this afternoon. Sudeep, great to have you on. So let's start right there. Finally, an IT company where it's not a complete washout, at least. The market is keeping the faith, keeping the hope on the second half being stronger. Are you convinced?
I think definitely it's a significant improvement compared to the others. Look, what I liked is the confidence of the management about the second half of the current fiscal. The CEO, MD CEO, very emphatically answered to you guys that second half will be much better than first half. While explaining, the CFO as well kind of agreed to that. So this is interesting, and this shows that their deal pipeline is strong, and they are not waiting for something new to happen to ensure that the second half will be good. They're already it's already in the bag. They know second half is going to be good. Future improvements will only add to that. So yes, I think Wipro definitely has shown that there are green shoots visible in their performance and in their earnings going forward.
Okay, that's the word coming in on Wipro. Let's talk about LTIMindtree. Q1 numbers were in line with estimates, but the stock is under pressure today. Kotak downgraded the stock, saying that it trades at full valuations of about 27 times forward multiple, plus the stock had gone up 24% in the last 3 months, and therefore they downgraded it, which perhaps explains why the stock is a bit muted today. We caught up with Venu Lambu, the Chief Executive Officer, Managing Director of LTIMindtree. Venu, thank you very much for joining in. Was Q1 largely in line with your estimates, and what can you guide for Q2?
Look, yes, the Q1 was in line with expectation. We grew 2% quarter on quarter on US dollar terms, and we expanded our margin as well, in line with the overall strategy that we have to double our revenue to $10 billion over the next 5 to 6 years. I think we've made a very promising start in that journey, right? And which is really an exciting period. And with regard to the momentum continuing into the subsequent quarters, absolutely. I find no reason why we can't continue the same growth momentum, and fairly confident about expanding our margin as well in the subsequent quarters.
Okay, so Q2 will be better, but what about the second half of the year being better than H1? Are you optimistic or confident about that?
Look, in second half, I'm actually, expecting that at some time in second half, we will have almost close to double-digit year-on-year growth, right? So we announced a very large deal at the beginning of the Q1, and we're almost at the final stages of announcing a couple of very large deals, and one of them can beat the record of a previous large deal that we announced. So all this momentum will carry, it forward towards the H2. And sometime in H2, we will have a year-on-year growth of closer to the double digit.
Okay, got that. Mr. Lambu, what has been the margin benefit so far under the Fit for Future? How much more do you think, what's your elbow room? How much more can you expand margins by?
Look, from Q4 to Q1, we actually increased our EBIT margin by 100 basis points, right? So if there was no one-off cost that we incurred, related to the visa and other things, we would have got the full benefit. But I'm sure part of that benefit will follow into the Q2 anyways. So we expanded it by 50 basis points in Q1. And I expect, over the next couple of quarters, we will at least achieve a 100 basis point margin outlook, in our business. So the Fit for Future is going very well, not just on the cost aspect of it, agility, transparency, that we can bring in the processes, agentic adoption into our internal business models, and most importantly, how do we enhance our competitiveness in the marketplace by rebaselining the cost and increasing the agility in our, the way we respond to our client demand and so on. So with that, I'm fairly confident that we'll continue to improve our margin at the minimum of 100 basis points over the next couple of quarters.
Okay, so confident about growth, confident about margins improving. Some analysts yesterday thought you sounded a bit cautious on BFSI. Is that the case?
Look, I don't know what gave an impression of being cautious. I've been very optimistic about how our business overall, especially in the context of our $10 billion journey and doubling our revenue in the next 5 to 6 years. If there is a seasonal weakness of in a particular quarter and year, it doesn't give any directional indication towards the growth of our business in the BFS. Right? I mean, we have a very strong relationship in the BFS space. We support all the global banks, the regional banks across different aspects of the financial services institution. So, there may be, a quarter here and there in our journey of, $10 billion where we might have some seasonally weakness quarter on some project coming up too early and so on. But otherwise, I don't see any material impact in the structure of the business that will slow down what we want to do.
What makes you confident about hitting this double-digit revenue growth at some point in H2? Because your peers are still talking about low, mid-single-digit kind of revenue growth. Is it purely, does your confidence stem from the deals that you won that are in the pipeline, or are you anticipating a turn in the macros?
Firstly, when we talk about the order booking, I spoke about that we are almost in the final stages of announcing a couple of large deals. So that gives me confidence that we will continue the momentum of the order inflow of the same range of $1.6 billion at least that we have been delivering over the last few quarters, that to continue. That's number one. And, number two is that, at some point off in the second half, our aspiration is to get into the double-digit growth in a year-on-year basis is at the back of these large deals. And also, the three big transformational initiatives that we're driving within the organization, right? So we are transforming our sales organization, with new capabilities and our ability to win deals, right from sourcing to the ability to close the deals. The second is our pivot to the AI-centric organization. We launched Blueverse, which is our agentic ecosystem for AI, and that has already gained traction. We actually have, got the first deal within 30 days of our launch on Blueverse. All right, and the third one aspect is that the Fit for Future program. The Fit for Future program actually makes us more competitive. Makes us more agile, and we rebaseline the cost and our ability to win large deals and still continue a profitable journey is possible as part of these initiatives. So there's a bigger picture that we have, and we're on that journey.
Final question then. You started this interview by saying that you're on track to achieve the $10 billion revenue aspiration, 5 to 6 years, which means about FY 30-31. What's the roadmap? Are you looking at any sort of acquisitions, anything imminent right now?
Well, acquisitions, is something that you don't make it as a part of the strategy. If it comes out, in your transformation journey, you evaluate it based on the value it offers to the clients and to our capabilities. So, and in the near time, there is no, such situation emerging, but we're always on the lookout for, potential companies which can bring a good synergy for us. But overall, as part of the $10 billion plan, we're working on our next 5-year strategic plan. I'll be able to share more updates, probably at the end of second quarter, on the strategic plan beyond this year.
Thank you very much for that. Sudeep, you heard the management of LTIMindtree He's sounding a lot more confident. Growth will continue in Q2. In H2, at some point, double-digit revenue growth year on year. There are large deals which are close to being finalized in the pipeline right now. The margin improvement will continue, at least a minimum of 100 basis points. He said that twice. So it's ticking all the boxes. Is it just the valuation which is making investors skittish right now, or something else?
No, it's absolutely just the valuation. I think there is nothing to read negative from the management interview, or the margin improvement is being confirmed repeatedly that at least 100 basis point margin improvement will happen. The deal pipeline, they seem to be confident. So I think they're ticking all the boxes. You're absolutely right. But obviously the valuation is something which is not at a very comfortable level, considering the overall macro situation globally. They must be, and I'm sure will do all the right things, but we'll have to wait for the macro to support also. The valuation at this stage from a company of this size is not giving comfort. I would rather look at the big four, Wipro or even HCL Tech at this stage to kind of take fresh position if I have to buy in IT, rather than getting into some of these names.
Okay. All right, so that's IT, got that point. Let's move on to the other big story that's coming in, obviously, from the banking space, and we're talking about Axis Bank. The stock has been under pressure. It's been down almost 4-5% right from the morning as the street digests, obviously, what has been a technical issue that's impacted asset quality. Now, the bank has also seen a number of high-level management changes in the past couple of years, along with key personnel leaving the bank in just the last 2 years alone. Over the same period, Axis Bank has seen strong deceleration in retail advances. Loan growth has lagged the industry, and deposit growth has also remained weak. The board has approved the appointment of Neeraj Gambhir as the executive director starting August. That's a development that's happened just today itself. And Ritu is here to put all of this in context for us. Ritu, I mean, it seems to be a bit of a crossroads, or should I say inflection point. This kind of change in NPA recognition norms, the exits that you described. So, how should investors digest all of it and put it together?
Well, Surbhi, it certainly is concerning for the street, and especially this top 11 churn that is underway that you were referring to at Axis Bank. Of course, the latest news is Neeraj Gambhir, who's the Group Executive at Treasury, Markets and Wholesale Banking, being elevated to a whole-time director role, designated ED for a 3-year term. And that's, of course, because Rajiv Anand, who we know the long-serving DMD and whole-time director, is stepping down. But, the problem is this is not an isolated shift, really in the top management. Over the past 2 years, there's as many as 6 top executives that have exited or are in the process of exiting the bank. And the latest, of course, announced today itself is Arjun Chaudhary, who is the group executive for affluent banking, cards, payment and retail lending, who's put in his papers. Rajiv Anand, as we already know, is going to retire in August. And prior to them, you've had key group executives who've been heading retail, liabilities, audit, wholesale banking, all stepping away from the bank. And, these changes are coming at a time when the bank is already facing some fresh operational headwinds, particularly when you look at asset quality in the numbers that the bank has just reported yesterday. That shocker of a slippage, 8,200 crores of fresh bad loans, nearly double the 2-year average. Even adjusting, for this technical impact, so-called, it's still quite high. Gross NPAs, highest in 6 quarters. Credit costs remain higher than peers, more than twice of its peers like HDFC or ICICI Bank, despite having a very similar loan mix to them. So that is triggering some concern on the street. I was reading a note from the likes of Suresh Ganpati of Macquarie on the street asking some very pointed questions. There have been these kind of technical credit costs and adjustments done in the past. If they are truly technical adjustments, where are the recoveries? Why do it now? Why not earlier? Could there be an underwriting or collection issue in the retail book? So these are the kind of questions that are being raised. And even beyond the asset quality, growth metrics seem to have weakened. If you look at the loan growth and the deposit growth, they've now been lagging the system average for multiple quarters. In the first quarter, we saw the credit growth was just about 8%, deposit just about 9%, again, underperforming peers. But perhaps, if you look at the numbers, the most dramatic dramatic reversal really has been in retail lending, which once was Axis Bank's key growth engine. If you look at the retail loan chart, if our producers could pick it up, from 27% kind of peaks in the third quarter of FY24 to just 6% in the latest quarter. So to just sum up, this long sort of description that I've been giving, there is operational stress, there is growth deceleration, and all this is coming in with a spate of senior level exits. So that does put the bank in an uncomfortable spot. So there are bound to be questions on what comes next.
All right. Very well explained to us. Thank you for that. Important to keep that context in mind, including, of course, the churn at the management level. Thanks for that, Ritu. Let's ask Sudeep. Sudeep, what do you think? I mean, it depends. The bank has been saying that they're just being extremely prudent. In fact, it's good prudential practice that they're following, and it's a one-quarter issue. But like Ritu described, I mean, there are other issues. Even this quarter, look at the NPAs, look at the NIMs. They've fallen more than expected. Growth is a problem. How would you look at Axis Bank, and is it an isolated issue when it comes to private banking, only restricted to Axis?
I think, let's divide it into two parts. If it's a question of loan growth, I think this is not an isolated issue. Pretty much everybody is on the same boat. And, the reason is somewhere the retail lending has been slowed down by most of these banks. And that has definitely hit the overall growth numbers. The corporate investment, capital investment hasn't picked up in the economy yet. And that, again, is not supporting the slowdown which is happening in the retail lending. It's not compensating, actually. So overall, there is a deceleration in credit growth. And that definitely does hurt a bank like Axis, which was supposed to be, challenger bank, rather, trying to catch up with the big boys, which is ICICI and HDFC. So that is one area which is a bit of a concern. The other area which I don't think is a concern is the provision. They have taken a one-off hit. They have changed the methodology, taken a hit, tried to be extremely conservative. Maybe we can call it one-time cleanup of the book, whichever way we want to describe it. I think they have done that, and I won't be too worried about that. And on the balance, the other numbers of the results which came out, I don't kind of have too much of issues with the other set of numbers. Growth, loan growth, definitely slow. Write-off, we know they have given explanation. So on the balance, I think if you are a bit aggressive, I think it's a good opportunity to accumulate Axis Bank at this stage. That's my view.
Got that. But banking is about people business, right? And Surabhi, and as Ritu said, the retail side, the retail head is gone. Retail is typically very templated lending, right? I mean, it's not easier to do, but it's templated. I mean, the form, you put address and name and income bracket, etc. But corporate lending is the one where you need experienced people who've seen cycles. And there, if you remember a couple of, I think till about last year, maybe a year and a half back, Mr. Ganesh Sankaran, who was the head of wholesale banking, which is corporate lending, he was, I mean, there was a buzz that he's going to get, there's a line of sight for him right at the top. But I think that maybe there is that issue as well, which is, and the other thing which Ritu, we won't know is each of these people has teams and trusted people under them, right? So when a person like that moves, it's not just him or her. I mean, there are that set of people which also kind of starts to, perhaps potentially move away as well. So we'll see. But in a way, I mean, personal-wise, tough times as far as Axis goes. We'll take a quick commercial break here. We're going to come back. Rajesh Bhatia is going to be with us from ITI on the other side. We'll talk markets. Welcome back. Rajesh Bhatia is now with us of ITI. Rajesh, great to have you with us here. Thank you for your time and good to speak with you as always. Just a quick word, Rajesh, on the Axis story, numbers, and will viewers who are watching, and I mean, the view generally is, I mean, from here, perhaps you will make money buying the name. I mean, that seems to be the general overall view, even though the stock is down about 5%. What is your sense here?
So not that I can comment on specific stocks, but I think the disillusionment with some of the private sector banks, including the one which you talk about, is that the NPAs have come up in spite of very low growth in loan. So it's not as if your loan growth was galloping and you make mistakes. Those are kind of acceptable. But I think with slow loan growth, you still have a credit cost which is kind of elevated and different from what other private banks are kind of registering. As you point out, there's still optimism, and I think that's based on two factors. One is that basically the valuations still are quite low compared to, for a private sector bank, relative to the other large private sector banks. And the second is the ingredients. I think the ability to make an ROE like other private banks are there. Just that there is an issue of this credit cost which keeps coming up, because of which I think there is some disillusionment in the short term. Having said that, I think it was fairly expected that most banks will see pressure in the first half because of the interest cost decline, which is impacting their NIMs and a low credit growth. We all know growth in the system has been very weak. We are in a slowed economy. And to be expected that second half onwards is when the NIMs will kind of bounce back for banks. So it's all expected as far as credit growth and NIM is concerned. In this particular case, there has also been disappointment as to the credit cost.
Rajesh, I mean, any trend that you spotted from the IT numbers so far? We've got 4 out of the 5 large cap IT companies reporting their numbers. And are you getting a sense that, you know, margins could be the next big thing to get hit? Growth was already hit over the last 2 years, but now margins are increasingly looking weak. HCL Tech lowered its guidance by 100 basis points. Companies are deferring their wage hikes. No one yet has announced a wage hike for FY26. They're all saying we're going to take a call based on the macros. So clearly there is some sort of margin pressure. Maybe it's AI-led deflation, or it just could be slower, you know, a weaker top line. But first, any trend? And to your thoughts on if margins could be weak for IT going forward.
Yeah, so I think as far as large cap IT is concerned, I think we are gravitating towards a low growth environment. Of course, the US economy is doing quite well. So I don't think there are any challenges there. Nobody is really talking about a recession in America. But decision making for IT companies is getting deferred. And one of the common reasons which we hear from IT companies is that this uncertainty regarding tariffs. Once there is greater clarity on tariffs, a lot of decision making as far as spends will actually accelerate as we move forward. Even on AI, I think what we are hearing from these companies is that while there is deflation as far as AI is concerned, it's not as if the dollar budgets are getting squeezed. The dollar savings are translating to other spends. And therefore, it's not as if the dollar revenue growth will kind of decline because of the deflation in AI. Having said that, the growth will probably accelerate once there is greater certainty on tariffs. Second is look at how these companies have already deflated as far as valuation is concerned. I mean, the top tier IT company is probably at 4% dividend yield and 21 times earnings. It used to be 30 plus times earnings. So there has already been a good deflation in the valuation. Now, these are still going to be marginal growth companies, and therefore the dividend will not accelerate to 7 or 8%. Let's say like a coal company does, or a lube oil company, where there was very little growth expectation. These are still companies which will grow and have massive free cash flows. So to that extent, 4% dividend yield and 21 PE is, I would say, closer to the bottom in terms of valuation. But the analogy there would be look at how this has deflated relative to consumer companies. So the consumer staple companies have similar growth rates, but their valuations are probably twice or more than the IT companies. In fact, I would say the second pocket, which is the consumer staples, are probably something that could be derated, over the longer run, if that is the kind of trajectory that they see. But as far as IT is concerned, I think the large caps are already reflecting the deflated valuations.
Okay. That's, how some of these larger sectors are shaping up. So, talking about the strategy from here on, in terms of preferred sectors, preferred, bigger bets that you would take, where you deploy additional money, Rajesh, where would it go? Because even for financials, I mean, now with Axis Bank, everything's become a bit of an issue. And we're seeing that reflect in banking stocks today.
So you have to widen your gaze. I think it was fairly expected that the first half is, you look at GST collections, you look at auto numbers, you look at credit growth. Not surprising that the results are weak. I think the results for the first 2 quarters are expected to be weak. But look at the RBI stimulus, right? How determined RBI is to get growth back on track. So my sense is that the 100 basis point decrease in interest rates will spur growth in the second half of the year, and therefore, there should be an expectation that earnings will for 26 second half and 27 will accelerate from the current levels that you have. So to be expected that the first half will be disappointing, but I would say elongate that gaze, and I think you'll probably find that there is room for optimism, and therefore, my sense is the downside to this market is going to be relatively low, but given the absence of triggers on earnings, it is going to be a bit of a range-bound market.
Okay, Rajesh, thank you for joining us. Range-bound market, that's the verdict coming in from you. Appreciate you joining us as always here on CNBC-TV18. Let's get a sense of what is buzzing around, right? I mean, in the broader markets, we've discussed the big names, and we continue to talk about some previews coming up as well. But really, what's happening beneath the surface? Hormuz is standing by on the wall. Hormuz, over to you.
Well, there are plenty of stocks beneath the surface that are also making some noise in the broader markets today. And MPS is one of them. Results came out just a few minutes ago, and the stock almost down 17% at one point, and on very heavy volumes as well. It was the core business that led to a drag in its revenues this time around. And the core business contributes to almost 60% of their top line. And they've also announced a restructuring of their European subsidiary. And that is what is causing the drag on the stock today. Almost 3 lakh shares, almost 3.5 lakh shares now traded, a 14-day average, a 20-day average of only 14,500. So that is one of the movers on very strong volumes. The other one, though, is GMDC. And every time a conversation on rare earth props up, it is GMDC that is always in the thick of things. 13.5% higher. Sources, of course, have told CNBC-TV18 that the PMO is going to hold a meeting today on the rare earth magnets issue. And that is what is keeping the stock buzzing. And on very high volumes, look at that, 2.5 crore shares already traded, a 20-day average of only 13 lakhs. And it is not only GMDC, but there is also an unknown stock called Permanent Magnets. Of course, taking the name a little too seriously. Magnets, the manufacturer of magnets, ores, alloys, 13.75% higher. At one point was up almost 20%. In today's trade as a slight cool off from the highs. So look at that, 80,000 shares have been traded, a 20-day average of only 7,500. And take a look at the market cap as well. A 900 crore market cap, does not have any major institutional holding, but a 1,000 rupee stock and 13% higher in today's session. Some of the others that are moving around today, Saregama, and that is of course after they announced yesterday that they are going to acquire the Haryanvi music catalog from a company. They signed the deal yesterday, and in a weak market like this, the stock is up 5%, and it snapped a 5-day losing streak yesterday itself, but on very, very strong volumes. 61 lakh shares already traded, a 20-day average of only 2 lakhs. So strong volume movers, all of these. And on the losing end, a usual suspect, but Bharat Dynamics was on the flip side of things when it comes to gainers, but 7-day of losses now for Bharat Dynamics, 4% lower today as well. They're poised for another weekly loss. It is the worst week that the stock is going to have since February of this year, and of course it is also declined in 4 out of the last 6 weeks. So defense not having a very good day. It hasn't had a very good month altogether, but there are a lot of other stock specific movers in the broader markets.
What an interesting list of movers. Hormus, thank you for highlighting that. Get into a break. On the other side, we'll get you a check on what our dealing rooms are saying in our segment D Street Chatter. Nimesh joins in and a few BTST calls.
Welcome back. Well, let's get to our favorite segment, D Street Chatter. As always, Nimesh has rounded up lots of buzz for us. And as we're going back to Nimesh, I mean, it's still a 150-point kind of a drop in the markets. It's not the best of afternoons. Nimesh, what's the sense? Range-bound week, but the bias has very clearly been down.
Oh, absolutely. And, I think today's drag is largely on back of disappointing results. Largely Axis Bank, that was a big drag for private banks. And now there are fresh fears of maybe asset quality concerns for the bank. So that's something to look forward to. We have very large earnings over this weekend, right? So Reliance is a big number to watch out for today evening. Within the bank itself, HDFC Bank, ICICI Bank, AU Bank, some big numbers are going to come. And that will set the tone for our markets on Monday morning. So that's something to watch out for. And earning, as I said, has been a bit of a disappointment. And that's dragged the markets down overall in today's session. Even from a flow perspective, it's marginally on the negative side from the FI side. For the last couple of days in the cash market, so that's showing up in the numbers as well. As I said, earnings will be important, but looks like a bit of momentum is lost, especially on the back of disappointing earnings. So in that sense, the broader market outperformance is something to watch out for. They have really little outperformed. First signs of profit booking there, but no panic as such. But I guess the large cap under pressure is largely on back of disappointing earnings.
Okay. Yeah, truly, I mean, that's really played out on sentiment today on several stocks as well. But speaking of stocks, what's the chatter? Where is the buzz?
Well, the first stock on my list is Tega Industries. We've seen of late, there is a bit of trend of M&As and, PE deals picking up. And Tega is buzzing on the back of on some hope of some large private equity deal in the company very soon. So that's a trigger there. We've seen a bit of an uptick in that stock in the last 1 week. And but again, for Tega, I'll just mention that the float is very less. The promoter holding is 75. The mutual fund owns 15% combined. So only 10% is the free float. So it can swing either ways. But the big buzz is that maybe there is a potential fundraising there. So that's the first name. The second stock is Natco Pharma. That's been buzzing in the last couple of days. The volumes also picked up. And again, in Natco, I guess the market is anticipating some corporate development, but there is some large HNI buying as well in the last couple of days. And the last name is GMR Airports. For second day running, I understand there are very strong buy flows. One leading FI fund seems to be a buyer of late. And there is also a hope of some price revision in the GMR Delhi Airport. And that could be a further trigger to watch out for in GMR Airport.
Well, GMR Airports, leading global FI active buyer of late. Lots of interest in this one, right? Actually, Nimish, not just GMR Airports, but the power business as well, right?
Yes. So even in GMR Power, well, there were a couple of large blocks last week. And since then, anyway, I think there is an enabling provision to raise funds. So maybe there is a fundraising lined up in GMR Power as well in the very near future.
Okay, Natco, GMR Airports, Tega, all in action. Nimish is under the weather a little bit, but he's not out, very much there. Nimish, hang in there.
Thank you.
Thank you very much for joining us with that. Well, Ashish Kayal is now joining us with what to buy or sell today for a reverse trade when we come back on Monday. Ashish, what do you have?
See, right now, I think we can look at Godrej Properties. The stock has been slowly and steadily inching up, and we can clearly see that over past 4 days, it's not forming a very big candle, but it's still bucking the trend when there is broader market under pressure. It's moving up. So there is a possibility we can start seeing momentum as well. And we can expect a target of around 2,500, which is the previous swing high. And on the downside, one can maintain a stop loss of around 2,300 levels. That's the one stock. And the other stock also I have on the radar is Jubilant Pharma, giving a good breakout. Volumes are decent enough. Managed to bounce back from its 20 DMA. Looks like the third wave starting. So one can keep a watch on this for the targets of 1,300. Maintain a stop loss of 1,190.
Yeah, no, actually, lots of action there. Thanks very much for that, Ashish. We'll come back to you for more. There's about 15 minutes to go for close. Reliance will report numbers later today. First quarter, big one. Sonal is here with what to expect. Sonal, over to you.
Well, it is expected to be a good quarter for Reliance Industries. Remember, the stock is up 21% already this year so far. In terms of revenues, we're expecting a decline to come about by 8%, but it will be strong margin expansion that we'll see. So EBITDA expected to go higher by 3% and margins expected to see a 200 basis points increase, coming around at 18.7%. Profits accordingly will see an increase of 16% to come in at 22,024 crore rupees this quarter. If we talk about the internal details, what will drive the risk growth for the company this time? It will be O2C, digital and retail, which will see strong growth for the company. However, it will be offset by weakness that we'll see in the oil and gas business. O2C will see an increase of 19% YOY in terms of EBITDA and 3.5% on a sequential basis. However, refinery shutdown is something that could impact some of the profits this time around. Jio ARPU, that is expected to increase by 1% on a sequential basis. And retail business EBITDA, that will see an expansion on the back of JioMart scale-up, operating leverage and increasing footfalls as well. So in terms of EBITDA, we'll see that it has been continuously increasing. Last quarter was around 43,000 crore rupees. Before that, a similar number. And this time around, we'll be seeing a 5-quarter high EBITDA coming in for Reliance Industries. So good set is expected from the company this time around.
Thank you very much for that. And the other two, HDFC Bank, ICICI Bank, it's going to be a super Saturday tomorrow in terms of numbers. Gaurav is now joining in. Gaurav, let's start with HDFC Bank. Of course, everyone's watching out for their maiden bonus. But in terms of numbers, walk us through the expectations.
Well, yes, when it comes to HDFC Bank, we already know that loan book growth was at around 7% on a year-on-year basis. Deposit growth was at around 16%. And on back of this, now people are expecting single-digit growth in terms of profitability. So let's understand the numbers in detail. Net interest income is expected to grow almost at a rate of 5%. Now, there is an impact on net interest margin, and this is because of the rate cut. They are expecting impact anywhere between 15 to 16 basis points for HDFC Bank. And as a result, when we talk about the PPOP, we are likely to see the same trend going ahead as well. They are expecting around 8% growth in terms of the operating profit. Now, first quarter is usually weak for agri segment, and that is the reason why slippages may go up. But at the same time, Street is not expecting any kind of negative surprise in terms of credit cost. In fact, what they're expecting is that 0.5% of credit cost on a quarter-on-quarter basis is something that bank can deliver and maintain. And that is the reason profitability is likely to increase just by 6% on a year-on-year basis. Again, following the same trend as what we have seen in net interest income. Now, a key thing to watch out for is the loan book growth outlook, because earlier the management had said that in FY26, bank can grow at a pace of industry, and in FY27 they can outpace the industry. So that is something which is we are watching out for. Second is that commentary on net interest margins. Let's see how much of the rate cut has been passed on, what the management has to say in terms of net interest margins compression in the quarters coming ahead. And third is that the CD ratio. Now, in this quarter specifically, HDFC Bank CD ratio has come down to 96.5%, but they had said that in the medium to long term, they will take it to 85 to 90% where they find comfort. So any kind of commentary around that is something, a crucial thing to watch out for. But as of now, steady state of number is what we're expecting from HDFC Bank in first quarter.
Okay, all right. So steady numbers from HDFC Bank, and the market will like that after the sudden surprise from Axis. But Gaurav, not just HDFC Bank, it's also ICICI Bank. So fill us in on that one as well.
Yes, when it comes to ICICI Bank, now we have already seen for the last few quarters, ICICI Bank has shown a very strong growth in terms of loan book, specifically given the size of its loan book. But in this quarter, we are expecting some kind of slowdown. Again, it will be higher than the industry, but it will be somewhere in the range of 12% on a year-on-year basis, what the street is penciling in. On the deposits front, we may see 13.5% of growth. And as a result, again, in this bank as well, we are expecting single-digit growth in terms of profitability. So for net interest income, we're expecting around 7% growth. There will be an impact on net interest margins of around 18 to 20 basis points. Now, the margin impact will be a little bit higher because here the expectations are that 50 basis point of the rate cut has been passed on to the customers, specifically because of the cycle that they follow. And that is the reason net interest margins may fall almost by 18 to 20 basis points. In this quarter specifically, OPEX may be a little higher. And at the same time, treasury income will also expected to be higher. And as a result, we are expecting around 7% growth in the operating profit. The same trend is likely to follow to profitability as well. But there comes again the asset quality segment. Now, slippages here as well, we are watching out on slippages. They are expected to go up almost by 20 basis points. We may see some uptick in credit cost as well, because there will be some kind of normalization in credit cost. And as a result, we are expecting around 0.5% of the credit cost from the bank this quarter. And as a result, again, profitability is likely to increase just by 6% on a year-on-year basis. We will be watching out on how the commentary is going to be on loan book growth, because again, we have already seen a very good pace of loan book growth. So let's see what management has to say in terms of loan book. Any kind of commentary on the asset quality is also going to be a key thing to watch out for, because so far we have seen this bank delivering a very good set of numbers in terms of asset quality. And any kind of commentary on margins here as well is something that we are likely to see and watch out for from the management.
Gaurav, so we'll keep an eye. Busy Saturday for you. So thank you very much for taking us through expectations. We'll take a quick commercial break here. We're going to come back with more on the other side. There is just, 8 minutes to go for close.
Welcome back. Just counting down to today's trading session. Mayuresh Joshi is now joining in. Mayuresh, any play on this entire rare earth magnet, story, the episode? Lots of individual stocks are moving around. Any that you've looked at, tracked?
Absolutely. So nothing in specifics, because I think there is still this expectation that the government will do something in terms of incentivizing the entire sector as we speak. And therefore, I think how the entire play happens is going to be something to be watched out for, both at the global level as well as the domestic level as well. And therefore, I think our own take is that we are a tad bit better off in terms of still looking at players within the core OEM players. TVS Motor, as an example, is something that we continue holding. But yes, I think stocks like GMDC, as an example, is something that are reacting today in terms of all the moves that you're probably expecting. But what comes out in terms of the potential reserves and surpluses that they probably own, and how do they monetize that? I think that aspect is something to be watched.
Bought the dip on Axis Bank?
No. So I think we still remain bullish on ICICI Bank. I know the results are expected tomorrow, but our own expectation is a far more stable set that ICICI Bank might probably produce. And therefore, the expectation is that the loan growth, the expectation in terms of NIM compression will be as per street expectation. And therefore, I think both in our global and local portfolios, ICICI Bank is something that we remain constructive.
We have the earnings coming up, and we just want for our viewers want to tell them what's coming up, lined up in terms of earnings. I'll come to you, Mayuresh, if you can have the graphics up. So next week, Monday, Tuesday, Wednesday, Thursday, Friday, because we'll really get into earnings out of this weekend, right? I mean, there's HDFC and ICICI, but after that, if we can quickly put this up. So 23rd, now I have to look at what
23rd is a Thursday. So let's start with Monday. And I think on Monday, we've got Eternal reporting numbers. So Eternal, Ultratech Cement, Oberoi Realty. Then let's get to Tuesday. That's July 22nd. I think we've got Paytm, M&M Financial, Dixon, Mahanagar Gas, United Breweries. And then I think Thursday is Tata Consumer, Infosys, Dr. Reddy's. 24th, SBI Life, Bajaj Finance, IEX. And 25th is Cipla, Bajaj Finserv, Loris.
Basically,
maybe I'm getting it's a busy week.
Well, anything interests you out of the? By the way, Coforge is next week, right?
Coforge should also be next week.
23rd, I think, Coforge. I mean, that's the one number, right? I mean,
the poster child for mid-cap IT growth.
Will it blow the lights out once again?
Yeah, let's see if it does that.
So that's going to be interesting. So Coforge is the other one. Mayuresh, any interest out of the names Reema mentioned?
Absolutely, sure. No, I think Ultratech is something to be watched out for, because I think in the entire cement pack, what Nuvoco today delivered, I think the expectation largely is that the second half, the earnings should come back very, very strongly as we speak. And therefore, I think Ultratech is something that we'll definitely keep on our radar. Coforge, since you mentioned that, Prashant, I think this is one stock out of the mid-cap with persistent that we continue holding it in our global portfolios. And therefore, it's going to be a very interesting take in terms of how Coforge probably delivers numbers. And obviously, I think a whole host of pharma companies are coming out. So I think we are having our eyes peeled to probably look at Cipla and Dr. Reddy, both in terms of their earnings delivery.
Mayuresh, found anything so far this season that caught your fancy, that made you think about maybe a buy? I mean, I'm just taking case in point, this week's probably best earnings in terms of market reaction was Ixigo, right? Because the growth was good and the stock was just bursting higher. But did you find anything exciting this week?
So, Survi, I think we've got a couple of names that we have kept on our radar. So one of the names that we are watching out for within the fertilizer space is Make Money Organics. The ratings, rankings look superb as we see it in markets with India. But I think the mix that they've probably got in terms of the fertilizer segment having 74%, and obviously the specialty segment at 34%, the kind of numbers that they've probably delivered in the previous quarter, if they're able to replicate some part of that performance in Q1 and continue in the next few quarters, I think this is one stock that we've kept on our radar in terms of where earnings might actually hold up compared to the rest of the market. And the other one that we continue holding in our portfolios is Vishal Mega Mart. Our own sense in terms of discretionary spending coming back in a significant fashion. And therefore, I think the expectation that one has really in terms of the same sales store growth, Vishal obviously has an exposure in terms of 44%, which probably comes through retail apparel. And therefore, I think as that part of the market comes back very, very strongly, specifically in tier 2, tier 3 cities, I think this can be one of the plays along with other players like V-Mart Retail as well, that can do it. So I think these two names will keep it.
All right, Mahesh, thank you very much. Short chat today, but helpful one. Thanks for joining in. You have a great weekend, and we look forward to connecting again. Well, we're down to the last minute of the days and the week's trading action, and it's going to be a week close, 140 points lower on the Nifty. But hey, it could have been worse because at one point, the index was threatening to break the 24,900 mark as well. So where has the drag been? It's been banks and financials throughout. Axis Bank is ending with a cut of over 5%. There are more names like HDFC Bank ahead of numbers, down 1.5% as well. Kotak Mahindra Bank is losing almost 2%. ICICI Bank managed to buck the trend. There's some green there, 0.5% up on ICICI Bank ahead of the numbers. Other weak names included Eternal, HUL, Trent, Titan. So these consumer names couldn't really offer much support to the market today. Pretty much fizzled out over there. Apollo Hospitals, Dr. Reddy's, even some of the pharma and healthcare names are on the red side of the screen. What did work? Well, Wipro, the earnings were well received by the market. There was a little bit of buying in Tata Steel, which continued from yesterday, and some names like Infosys and HCL Tech, again, 5-6 rupees on each stock, not too much, but for what it's worth, there was a little bit of a green here and there. Reliance has ended absolutely flat ahead of earnings later this evening. Just very quickly wrapping out the action on the mid-cap side as well. Clean Science, numbers was one thing, but the promoters selling stake in the market, that was not taken well by the shareholders. 9% down on that stock. Sterling and Wilson, Shoppers Stop, these are all result reactions and reactions on the downside. Even LTIMindtree, despite that positive commentary from the management, stock is ending down over 1.5%. Gainers, well, some interesting names. ITC Hotels, 5% up. PVR Inox, almost 4.5% higher. And then GMDC, the stock that we were discussing on the show earlier as well, with all eyes on this PMO meeting on rare earths and how to ensure supplies for Indian companies over here, rare earth magnets. So that stock's holding up, it's gone home with a gain of almost 15%. In all, the mid-cap index actually falling more than the Nifty today, and a very weak advanced decline ratio as well. So not the best end to what has been a range-bound week, and the range just challenged and broken slightly on the way down. 25,000 did not hold finally on the Nifty. Well, that's where we take your leave on this edition of Closing Bell. Many thanks for watching, but don't go anywhere because lots of market perspective is coming up. Just in the next couple of minutes, we have Editors Roundtable after this break.